All right, so I want to jump in and talk about doing a skewed iron condor, and that's kind of break that down. I want to do a skewed iron condor in the Russell 2000, which is the small cap stocks. So I'm going over to this options on futures here. You can potentially do this on the RUT, which is the RUT, but with this with the futures options, it seemed to be a lot better structure to it and buying power wise. So let's do a skewed iron condor. When you're doing a skewed iron condor, it can be skewed based on the width of the spread. Like for example, the put side can be wider than the call side, or the call side can be wider than the put side, or it can be deltas. Your deltas can be different, a difference, meaning that maybe on the put side you're at a 15 delta, on the call side you're at a 10 delta, so it's skewed, right? You're a little bit more bullish delta wise in that example. In this case, we're going to look to go to the 2360 on the call side, and let's see what that is. That's going to be a 7 delta, and we're going to do a 40 point wide, or actually a 30 point wide spread here. We're going to buy the 2390, and that's going to give us $70 just on the call side, and it's going to increase our buying power to do that. Then we're going to go to the put side, and we're going to sell the 1950, which will be right here, and that's 11 delta. So that's already a higher delta than what we're doing on the call side. And then we're going to do this 60 points wide instead of 30 points wide. We're going to double up on the put side because we're going to be a little bit more bearish. So this is a skewed iron condor leaning bullish. We're going to be a little bit more bullish on this trade. I apologize for saying bearish. We're going to be a little bit more bullish on this. All right, so this is 50, this is 60, so this is the trade we're going to look to do here. You can see that before fees and commissions, we're receiving 240, and the buying power is insignificant here in this account. So let's look at the curve view so you can see how this is set up, because an iron condor is a neutral type of trade, but it could be skewed. It could lean to one direction depending on your opinion. So it can be, you can lean bearish, you can lean bullish. In this case, we are leaning a little bullish by deltas and by the width of the spread. So this is at the money line, and an iron condor is inherently neutral, regardless if it's skewed to one direction or not. You still want it to stay in between your short strikes. So in this case, we want it to stay in this area here. We don't want it to go past our put side, the 1950, or our call side, the 2360. So our win zone is, as you can see on this curve view here, this green area, this is our win zone here. If it goes down too much, we can lose. If it goes up too much, we can lose. But we're betting based on this type of trade that it's a super high probability trade, and we'll be able to get in and out of this with the win. So let's actually send this. Let me know if you have any questions on this while we're going to do this. We're going to send this trade, see if we can get filled. And so that goes the trade, and we're gonna have to probably work it for demonstration purposes to get filled here. We're asking for 280. It's saying 275. We're going to drop this down to we're asking for 480. It's looking at 475. We're going to drop this down to 470 and see if we can get filled, and that still give us over $200 here. So we just got filled on that, and that was the skewed iron condor. Let's look to see if we can do another trade now in oil. This morning we sent out some trade ideas, and we had a yellow highlighted trade in oil, and we had a bullish bear strategy in oil. Let's see what that looks like now, and if it doesn't look the same, then we'll look to do maybe a skewed iron condor in oil as well. So we were looking at buying on the put side, buying the 63.5, selling the 63. This is the bear part of the bullish bear that we've been discussing recently. Once again, this is the bullish, this is the bear part. So you can see that this is the spread here. We're going to pay 14 here, which is $140 before fees and commissions. Our max profit, if it goes past this strike to 63, if it's in this area, we can get up to 360. But this is the bear part. This is what we're using for a hedge. Then if we go down and we look at what we were talking about, we were going to sell the 58, and that's here, which is a 13 delta now, and we're going to buy the 56, and then we were going to do 2 contracts of that. So if we did 2 contracts of that, that'll look like this, and we will receive over 220, and I don't like what that is doing to the buying power in this account based on this trade here. So we're not going to do that trade. That's a lot of buying power for this account. So we're going to drop that. If we did that one, if we were doing 1-to-1, then it would work, but it doesn't. We're not getting enough credit, right? So it's only a $40 credit, so we wouldn't do that. So let's look to see what happens if we did a skewed iron condor in here. See what happens there. So the put side is requiring a lot of buying power. Let's look to see if we did something like this here, and that dropped the buying power quite a bit at that 13 delta. And then if we went up here to the call side, and I just say it's at the 66, 76, something like this. Let's see what this looks like for us. So this is a pretty good skewed iron condor here. Let's see if we can see it on the curve view. See if we can bring this in a little bit. All right, so you can see it here. This is the same kind of concept we were just doing a second ago. This is the at the money line. We wanted to stay in between these two short legs. So this is the short leg on the put side. This is the short leg on the call side. If it goes down too much, we stop losing once it hits this stop loss, and that's this long put we bought. If it goes up too much, we stop losing once it hits this stop loss of the call side that we bought. So an iron condor, just for new people purposes, an iron condor is selling a put spread and a call spread simultaneously, and that's what makes the iron condor. It makes it neutral. If you sell a put spread, you are bullish, you want it to go up. If you sell a call spread, you are bearish, you want it to go down. So if you do them both, it's a neutral type of trade. But once again, you can do a skewed or slanted or something that's leaning directional, right? And that's, in this case, we are skewed here, and we're actually leaning bullish on this one as well, because and this time only by the delta. So this is a 13 delta on the put side, and then this is a 8 delta on the call side. The trade that we just got filled on in the Russell 2000, that was skewed in 2 different ways. It was skewed by the width of the spread. It was wider on the put side than the call side, and then it was skewed by the delta. We had a higher delta on the put side than the call side. All right, so I like this trade here. We're gonna look to put this one on with 30 days to go as well, and you can see that we're at the 13 delta there at the 58. Last time it was at, we're gonna look at oil on this chart really quickly before we send it. Last time it was at 58 was quite some time ago, because the 200-day moving average is 59.76, and I just looked to see when we were at 58, probably somewhere in the time frame of March of this year, late March, mid to late March of this year, we were around that 58. So we're betting that that's not going to be the case within the next 30 days, and we're going to get in and out of this with 50% profit after fees and commissions. All right, so let's send this here and see if we can get filled here. And we have no love to this point yet, but let's go to the activity here, and it just dropped a little bit. I would still like this a little bit at 14. So let's see if they'll give it to us at the 14 strike there. So 122 over 375. We're going to sell that, and then they gave it to us. So the true mid was probably the 15, but we will take it. So we just did 2 skewed iron condors. Once again, one in the Russell, one in the oil, and we like both of those trades. All right, so did anyone do these skewed iron condors with us? Anyone on the call do these skewed iron condors?
I went ahead and I tried to get in the RTY. I'm still waiting for it to let me in.
Okay. All right. Sounds
I did
good.
the RGY one earlier and got it for the price that you said.
Okay. Okay. Perfect.
I did the
Okay.
R2Y as well. I'm waiting on the CL field.
Okay. Okay. Awesome. So I think they're all pretty good trades.